Businesses providing taxable supplies, such as contractors, need to consider VAT. But every year the government in the budget sets a VAT registration threshold, and that operates from the 1st of April in one year to the 31st of March in the next year, and it tends to change every year. If your turnover is expected in a 30-day period to exceed the VAT registration threshold, you have to register immediately. Alternatively, if in any 12-month period your turnover exceeds the VAT registration threshold, then in force you have to register at that point, and you get 30 days in order to register. So most contractors don't have to register at day one, but again, probably at least 50% of them will need to register at some time in the first 12 months. VAT is charged in most cases at 20% on taxable supplies. So the invoice that you raise to the agency for your services is a taxable supply. So if you are raising an invoice for, say, £6,000, you would add 20% VAT on that, an additional £1,200, and the agency would pay you £7,200. The money that you've collected, you hold on to, and every 3 months you file a return with HMRC. You declare the VAT that you've collected, and under normal VAT accounting you set off against that the VAT that you've incurred on expenses. So for instance, fees from an accountant, VAT is charged on them. That VAT you set off against the VAT that you've collected, and you pay the net amount over. From the agency's point of view, the VAT that you've charged them is something that they will set off against their VAT liability. The flat rate scheme was introduced as long ago as 2004, and the government recognised that a lot of small businesses were making innocent errors in their VAT calculations. Under the Flat Rate VAT scheme, businesses in general don't need to consider the VAT that they're incurring on expenses because they simply don't claim it back. But in return for that, they pay over less than the VAT they've collected. So instead of paying over the 20% that they've invoiced to their customer or client, they're paying over something less than that. And it's called the flat rate scheme because it's a flat rate percentage applied to their total inclusive of VAT turnover. And the actual flat rate used depends on the sector of the economy that the business is in. So it's intended to, on average, ensure that businesses pay over the same amount as they would have if they weren't on the flat rate scheme. So for contract workers, there are generally two rates that apply. The first is 14.5%, which applies to IT consultants, and the second is 14%, which applies to management consultants. Right, in a typical example, if a contractor, an IT contractor, has a turnover in a year of £80,000, the VAT he would charge his agency would be £16,000. That's simply 20% of 80,000. Therefore, the total amount that he's collecting over a year is £96,000. Now, if we go back to the £16,000 he's collected, under normal VAT accounting, he wouldn't pay over £16,000. He would deduct the VAT that was charged to him on expenses such as accountancy, stationery, maybe computer consumables and computers. What I tend to find is that for a typical contractor, that VAT in total will be no more than £500. So that particular contractor billing £80,000 is likely to find that under normal VAT accounting, instead of paying over the £16,000 that he's collected, he'll be paying over £15,500. And that £500 VAT on expenses is his financial advantage of being registered for VAT. Now, under the flat rate scheme, he'd lose that £500. But instead, what we'd do is we'd look at the £96,000 that he's collected, we'd multiply that by 14.5%. Now that gives 13,920, and I think you can see straight away that's a substantial saving on the 15,500 that he would pay under normal accounting. In fact, for most contractors, the difference there alone will pay the contractor's accountancy fees. Now, to encourage contractors and other small businesses to go on the flat rate VAT scheme, the government decided that they would allow a 1% discount. This 1% applies from the date of registration, and for a period of 1 year from the date of registration for VAT, the contractor gets a 1% discount. So in this instance, for the first 12 months, instead of paying 14.5% of his gross turnover, he'll pay 13.5%. That amounts to £12,960. So broadly speaking, that's an extra £1,000 he's better off in his first year. The flat rate scheme has a turnover threshold, so it's only available to businesses who anticipate their turnover is going to be less than £150,000. So contractors generally, most of them are able to register for VAT, but anyone who's got a day rate of above about £700 needs to look at it carefully. The other kind of person who has to consider carefully whether he should go for the flat rate scheme is the one who, for various reasons, has a lot of VAT on expenses. Now, the typical example here would be a contractor who's working remotely and is staying in hotels. Hotel charges are subject to VAT. So if a contractor was staying in a hotel, say Monday to Thursday, and travelling back home on a Friday, he'll be incurring quite a lot of bills if he stayed in a hotel rather than, for instance, renting a flat or in a bed and breakfast establishment. So his VAT on expenses is likely to be very high. It's worth his while doing a calculation because he may find that he's better off on normal VAT accounting. We tend to find that those examples are few and far between. VAT returns are submitted usually quarterly. Your first VAT return is likely to be for slightly more or slightly less than 3 months. It will always end at the end of the calendar month. VAT returns must be filed online. So you need to, once you're registered for VAT, you need to register for online VAT on the HMRC site. That's a very straightforward procedure and takes about 5 minutes. Having registered, you then need to log on every 3 months and file your return. We will always do the first VAT return for a client without making a charge. We basically feel it's in our advantages to look at a contractor's records early on to make sure things are going well. So although VAT returns are very straightforward, and by and large we recommend that our clients complete their own VAT returns, we like to do the first one. It gives us an opportunity to look at the accounting records at an early stage and iron out any difficulties, and we can also deal with any misunderstandings that the client may have on VAT. Can you exit the flat rate scheme? Well, yes you can. You can exit the flat rate scheme at any time you like, but if you do, you can't go back in it again for at least 12 months. So I think we need to consider, why might you want to exit the flat rate scheme? I think the answer is perhaps obvious, and that is that if the nature of your work changes and your input VAT on expenses increases, you need to review it. So typical way this happens, I've partially illustrated already, but if you suddenly find yourself with a contract and you're working remotely and you're staying in hotels, then your input VAT is likely to increase, and you may find that you're better off voluntarily exiting the flat rate scheme. But I must emphasise, you need to be careful about this because you have to wait for at least 12 months before going back into the flat rate scheme.